Welcome everybody to the Chinchilla Pickin' Podcast. It is June the 2nd, 2024 at 4:16 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the Baron of Bonds, Brandon Beaver. Brandon, what's up, man?
Dallas Mavericks in the NBA Finals.
Really? That's what we have?
They'll be going up against the Boston Celtics. It's going to be a dogfight, man. It's going to be a tough one. So if you're not an NBA watcher or follower normally, I definitely recommend watching and following this series. It's going to be crazy. You've got a really good complete team in Boston, and you've got a pretty good complete team in Dallas too. But the two to watch, Kyrie Irving and Luka Doncic. So a lot of people are saying that he's going to prove to be the best player in the NBA right now. He's only 25 years old. And, he ranked first in every statistical category that you can think of in the playoffs this year. So,
well, there you go, man. There you go. I don't really have anything big fluff news story. Usually I have like one or two topics, but like nothing I really kind of want to bring up, man. I appreciate, I tell you what, I am covering something this week based off what a listener asked. So I appreciate, Brandon and I appreciate when you guys listen to us and then you give us feedback or you send us questions through our DMs. DM us on StockTwits, DM us on Instagram, DM us on TikTok, and say, "Hey, I want to hear this," or "Can you guys cover this?" And we will cover it. So this one,
there's plenty of fluff that we can cover in political news, but listen, I don't want to go into it. I'm so sick and tired of hearing about it myself. So sick and tired, and you jump on Facebook, and then people treat the Republicans and Democrats like their favorite sports teams, and it's just so annoying. Let's just get away from it. Let's talk about stocks and finances. When I go to the Wall Street Journal cover page, it's all about Hamas and Israel, and then it's about the situations with Trump, the election coming up with Biden. I'm so tired of it. Let's just talk business. Let's talk what matters.
Yeah, I mean, if a story has to do with business, I get it. But if it doesn't, what's the point? We're here about making money in stocks and investments. I tell you what, though, a couple good calls I've had recently. Novo Nordisk continues to go up for me. I recently in a small group chat had someone buy Altria. That's going up for them. Pony is that one ETF that went up, but I didn't really want it to go up, but it did go up. So, I mean, I guess it's a positive there as well. A couple other things, ExxonMobil's moving in the right direction for me, but that has to do with a lot of these stories I'm about to cover and the whole connection with oil and an update on OPEC and all that kind of stuff too. So, yeah. I mean,
Altria is probably up on positive cancer research news. I know Pfizer had some positive news there too. I didn't track the stock this week to see how well that performed or if it didn't perform based off of it. But
I think you got Altria mixed up with a healthcare company.
Maybe it could have been AstraZeneca.
AstraZeneca, yes.
Pharmaceuticals here. There was some good news over the week. For drugs that are already FDA approved and have already been used, I read a story about a guy that was 24 years old, never smoked a cigarette a day in his life, was diagnosed with lung cancer at the age of 24. And he 9 years later, and he's still living a full and productive life right now because of a treatment that he's on that's from Pfizer.
Yep.
That's incredible news.
Yeah, and GlaxoSmithKline had some good news over the week. It was also a blood cancer drug. Blood cancer is currently incurable, and there's a drug that they had the 71% success rate of not spreading and becoming controllable. Yeah. So that was some big news from GSK over the week as well in healthcare news. But yeah, there's a lot of good healthcare news. Someone had asked me for a solid, stable stock that paid a decent dividend, and I told them Altria. Now, Altria is not healthcare. It's the exact opposite of healthcare.
Oh, my bad.
Exact opposite. I was like, where's he going with this? They cause problems. Altria causes problems.
Well, it could also be people saying, hey, look, people, this is for Pfizer and for, I think it may have been AstraZeneca. But for Pfizer and AstraZeneca, this is not just, people that got caught early with the cancer. This is stage 3 and stage 4.
Yep.
I mean, that's pretty incredible. And maybe people are saying, "Oh, let's all go smoking cigarettes now. Who cares?" And that could be it.
Maybe, maybe. How about we get into the meat of the show? I mean, we could sit here and chat about the news and stocks that we've heard good news on over the week and earnings reports that came out that, Brandon and I could chit chat on that. If we ever do a live event, feel free to come up to us and do a lightning round with Brandon and I and see. I guarantee you, we have some news on some stock that you want to ask us about.
Yeah.
And if not, it would really only take probably about 30 seconds to jog our memory of what was going on with it before one of us would start talking. So the next live event we do, please, everyone show up and just head us with questions.
So
I'm
we,
sure
we've
we'll
had
get it.
we've had over 160 hours of content produced on the show. Now 161 shows, including this one. That in itself, combined with the fact that we, did this for almost 10 years myself before doing the show and in the stock market, and then you were like all the way back in like 2005 or something like
Yep.
that when you started. So we probably know a lot of things that we don't know.
You're right. That's a good way to put it.
Yeah, just
Very good way to
somebody
put it.
mentioning something, it's going to trigger something in our brains to remember.
Um, So rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show for you. Brandon always takes it away and takes the lead. Usually, not always, usually. So Brandon, take it away. What do you have, man?
All right, so we have a new player in the cola wars. Everybody kind of was divided between Pepsi and Coke, the red and the blue camps, right? Now there's I don't know. I'm colorblind. Is it maroon, Dave? Is the can maroon for Dr. Pepper?
Yes, maroon is a good color. Pigskin color, I think, is what they really want, but it's maroon.
Okay, so maroon, yeah. Well, that's because, and this is probably one of the reasons why they caught up with Pepsi. They've tied them now in market share and in sales, and probably one of the reasons, significant investments in college football. So I mean, maybe the pigskin is what they're going for. I don't know, but number two now tied with Pepsi, not including Pepsi Zero and Diet Pepsi, just regular Pepsi. And that's included by sales volume data from Beverage Digest. I actually subscribe to that because I'm a dork.
Beverage Digest. Yeah. You
I,
get your
I
regular
do.
email subscriptions. Gotcha.
No, it's not an email. I get the magazine in the mail, every month.
Nice.
Yeah, and InBev is another one that I do too. Just because these packaged goods companies like a Pepsi and Keurig Dr. Pepper, for example, they sell a lot of things, and so I'm interested in knowing if their stock's doing well. Coca-Cola the same way. I want to know if the company's doing well, so they're on my watch list. I have not bought Keurig Dr. Pepper yet. It's something that I would want to buy just because of the growth that they've had since 2005. Let's get into this a little bit. The Dr. Pepper success can be attributed to significant marketing investments, innovative flavors, distribution advantages that take place on more soda fountains than any other soft drink in the United States. You look at not Dr. Pepper, but like McDonald's, Wendy's, your top fast food joints. They either carry Pepsi or they carry Coke, but they all carry Dr. Pepper also because it was never really considered a competitor. It wasn't that long ago that they were number 6 in the marketplace, tied with Sprite. So Pepsi and Coke really never, tried to lobby against Dr. Pepper to get them removed. Plus, it's a different taste. It doesn't taste like Dr. Pepper or Pepsi, or like Coke or Pepsi, I mean. Coke and Pepsi, very similar taste. A lot of people can't tell
Yep.
the difference. I can. But you can always tell if you're drinking a Dr. Pepper. Totally different. My favorite soft drink, by the way, that's what we have in our refrigerator at all times, is Dr. Pepper. And it makes sense because apparently Dr. Pepper had a stronghold in the South for years and years and years. That was kind of like the South's number one soft drink. And I think RC Cola did better in the South too. Now, my lineage, both sides of my family come from the South. They come from Southern Kentucky, London, Kentucky, Tennessee, and North Carolina. So it makes sense that this was passed down to me and brought up here into Cincinnati, Ohio. Regular Pepsi consumption has declined as consumers have switched to Pepsi Zero Sugar and other beverage options. So that could also be a contributing factor here. Pepsi could still be maintaining market share with their other options that they have. But as far as singular soft drink options, Dr. Pepper is now tied for the number 2 spot. Dr. Pepper predates, by the way, this is the oldest soft drink right now in the United States that I know of, at least. Invented in 1885 by Charles Alderton. This was a pharmacist and soda fountain operator in Waco, Texas. Dr. Pepper's syrup concoction combines 23 flavors. That's famous. We all know it from the commercials. Includes cherry, vanilla, and other fruits and spices. Interestingly enough, he concocted the beverage and the taste to smell like the pharmacy that he was running. So I don't know. I guess pharmacies back then smelled good.
Yeah,
Like,
apparently. I mean,
you
yeah.
go to Walgreens these days and saying, "Huh, I wish the soda tasted like my local Walgreens." That'd be weird.
I wouldn't say that.
Yeah, no. So the U.S. soft drink market right now is $97 billion. Like I said, it was often divided into red and blue, Coke and Pepsi camps. And they had their own distribution networks and competition for national restaurant chains. Like I said, this is something that Dr. Pepper is benefiting from because they've not been viewed as a competitor in this space whatsoever. They have alliances with both Coke and Pepsi. This is a common presence in soda fountains, regardless of brand. In 2004, Dr. Pepper was tied with Sprite in sixth place, but its market share has steadily increased since then, thanks to consistent marketing emphasizing its distinctive taste and substantial investments in college football. They are the third largest beverage company in North America. Revenue exceeds $11 billion. This was formed through the merger of Keurig Green Mountain and Dr. Pepper Snapple Group in 2018. Now, a lot of analysts are saying that Keurig Dr. Pepper has some headwinds here. The reason why they're saying that is because the Keurig brands, the Green Mountain and the coffee pods, for example, they say that the coffee pods had a significant boost to revenue during the stay-at-home period of COVID, and this is going to face some challenging, comparables year over year. And that's possible, and I think that's probably, there's a little bit of truth to that. But now, since you've gone back into the office or to your workplace, if you're not working in an office, one thing that I've noticed is instead of having regular coffee, Folgers, everything is Keurig now, even at the
Yeah.
office. So
Yeah, I see that as well. Every place I
right,
go. Keurig,
and so
Keurig, Keurig.
yeah, so I don't know how tough those headwinds are going to be at this point now that all the offices have gone the same direction that you did at your house 10 years ago. So their strategy here, so by the way, key brands they include Keurig, Dr. Pepper, Green Mountain Coffee Roasters, 7 Up, Canada Dry, Schweppes, A&W Root Beer, Sunkist, and a lot more because they have over 125 owned, licensed, and partner brands. So quite a bit here. They have approximately 28,100 employees that work across 120 offices, including manufacturing plants, warehouses, and distribution centers in North America. Their strategy here, they're aiming to gain market share by leveraging key brands and large scale. Strategies including line extensions like Snapple, super premium teas, and stuff like that. Also they've got the Dr. Pepper Cherry. They did a cream soda a little while ago that kind of limited releases to the market. And what they're saying is a lot of those limited releases are getting people to actually be fans of the regular Dr. Pepper. So they're getting returning customers out of that. They focus on convenience stores, vending machines, and independent retail outlets that offer single-serve packages. U.S. liquid refreshment beverage volumes increased by 0.7% overall in 2022 for the entire economy, by the way. This includes all brands of soda. So that's actually a pretty decent increase. Key growth categories for the United States include sports drinks, ready-to-drink coffee, energy drinks. Competitive landscape looks like Coca-Cola and PepsiCo are their major competitors, each representing over 30% of the market. This is also interesting to me because just a couple of years ago, prior to COVID, they weren't looking at Pepsi and Coca-Cola as their major competitors. They were looking at other soft drinks like Jones Soda and such because they were not included in the top 3. Dave, you have any thoughts on this?
I did. I totally blanked. I know they have a stronghold on the airlines because every time anyone flies, Canada Dry Ginger Ale is definitely one up there. You said Schweppes, is it?
Yeah,
That's just fun to say. That's just fun to say right there. Yeah, the college football scene, everybody knows the mascots, the whole deal for here in the United States for college football. We have a lot of international listeners. So I'd like to specify that. And it is a big growth for them. Can they compete internationally against Coke and Pepsi, or is this just United States only competition here? Do you know?
Globally, that's what they're looking to do. But right now, we're just looking at the United States. So baby steps, Dave. Baby
So
steps.
maybe if they sign up with FIFA for the next World Cup, or something, that would be a step for Dr. Pepper there.
Yeah, it would be. And you know what? Here's the thing, though. You brought up the airlines thing. The only time I ever encounter Canada Dry in my life, who the hell drinks this stuff? Like, I want to say more curse words than I'm allowed to. Dave, you don't have it at your house ready to go, though, right now. Like, if you go to your fridge, it's not going to be there, is it?
No, it's not. It's not.
Like the first thing that the airlines have right there is the Canada Dry, and I'm like, why? Why don't you have a Coca-Cola or a Pepsi or a regular Dr. Pepper? Why am I being offered Canada Dry?
But everybody gets it. I get it when I'm on an airplane every time.
Yes, I do too, because it's there, not because I want it.
Well, think of all the thousands of flights a day going across the United States and all that Canada Dry being.
Yeah, that's they're getting kickbacks or something. I'm telling you. Dive into the financials here. Revenues increased from $12.7 billion and over the course of 2 years. This is from 2021 to 2023 to $14.8 billion. Adjusted earnings per share grew from $1.60 to $1.79 a share. Quarter one adjusted earnings per share, 38 cents per share. Cash and equivalents are $317 million as of March 31st. Debt is at $15 billion. Annual dividend is 86 a share, so 86 cents a share. So you asked me before the show if they had a dividend. There you go. Stock repurchases in 2024 were $1.11 billion. I am a little concerned about that debt because it does make their debt to equity a little bit high, but they've made some very significant strides over the past 10 years in getting that debt down and managing their balance sheet. So I'm expecting better things to come for Keurig Dr. Pepper. I know people are saying there's headwinds from the working from home environment going away. But, I don't think those headwinds are as bad as a lot of analysts expect. So I have it on my watch list, just as I have Costco on my watch list, which I'm about to talk about in a minute. When I say I'm looking for a decline here, guys, I'm not looking necessarily for a 2 or 3% decline. The companies that I often talk about are durable companies. And so, if you buy on that 2 or 3% over the course of years, it's not going to be a mistake. But really looking for discounts, you're looking for those corrections of 10% or more. And I want to say that because Costco was down after their earnings and they beat on earnings again, but it was like a 2% drop and then it came right back up a little bit. So it wasn't enough of a discount to get me to buy on Costco, for example. Visits to Costco rose 8.9% year over year in the first quarter. Look, we were all thinking tough comparables here on Costco, and they knocked it out of the park again.
Hold on 1 second. I want to go back to Dr. Pepper real quick. Looking at their stock price and based on everything you just told me and seeing their historical numbers here real quick while you were talking, I was trying to multitask. I'm not looking at a buy personally for me, unless it's something I want to hold very long term. Then I wouldn't mind it. Long term, they look to have growth, but they have a lot of ups and downs, hills and valleys, and it's not a. They are over the last 5 years positive.
Yeah.
It's just 17% though, and that's
And
not a lot of growth. That's why I'm looking at a dividend, because if you're just 17% growth over 5 years, give me some other reason to invest with you, man.
Yeah, that's true. But the thing is with Dr. Pepper Keurig, their growth has outperformed the rest of the soft drink industries in the United States over as a whole. That's really the good news for them.
Gotcha. Yeah, let's get into Costco and the $1.50 hot dog of soda.
I'm going to talk about that.
I know. He was all over the news. Anybody who is an investor already saw this news, but I want to hear it from you, Brandon.
All right. Visits rose 8.9% year over year, and they outperformed foot traffic gains from competitors such as Sam's Club, BJ's Wholesale, Target, and Walmart. And this is according to Placer.ai. So outperforming foot traffic from Walmart. That's pretty good, right? So
it's impressive.
Yeah, it is. And we were all thinking, I don't think I said it on the show, thinking possible tough comparables, which I've said 1,000 times. I hate when CEOs use that as an example, because it just means that you didn't forecast correctly. But for me, 8.9%, when you're talking about, moving out of the stay at home era, you're still growing really pretty phenomenally. Costco reported third quarter revenue of $58.52 billion, up 9.1% year over year. The revenue total beat the street consensus estimate of $58.07 billion. They said that their net sales were positively impacted by 0.5% to 1% due to a shift in the fiscal calendar. I I guess that makes sense.
Is it a leap year?
I'd have to
Leap
really
year?
look at it and see. I guess so. Costco reported earnings per share of $3.78 for the third quarter. That beat the street consensus estimate of $3.70 per share. Comparable same store sales in the third quarter were United States, and we're going to break this down by region here. So, United States were 6.2%, Canada 7.7%, other international 7.7%. Costco is really big in Asia, by the way. I don't think a lot of people understand that in the United States. Like, everybody in Korea's got a Costco card. And I spent about 3 months in Korea like 15 years ago. And even back then, it was huge. Total company, same store sales, 6.6%. E-commerce was up 20%.
Nice. Good
Yeah,
for
and it's not
them,
even
man.
really it's not even really
Is
a
that the
major focus.
gold? Is that people buying gold?
I mean, it might be, it could be, it could be 20%. They don't even really focus that much on e-commerce like other companies do. But the company said that it currently operates 878 warehouses globally. 605 are in the United States and Puerto Rico, and that's the largest market right here in the U.S. The most important news item, Dave, and this is straight from the CFO. To clear up some recent media speculation, I also want to confirm the $1.50 hot dog price is safe,
Nice. Good.
not changing. Now, ever since they implemented the $1.50 hot dog price, if they would have increased the price for inflation, it would be at about $4.75 today.
Wow.
Yeah,
Just for a hot dog and soda, man.
a hot dog and a soda. But you know what they're doing is they're introducing new menu items that are a little bit higher margin, like pizza. They got a new double crusted cookie or chocolate chip cookie or something like that they upcharge a little bit more on, but they keep that hot dog at $1.50.
Good for them. I don't have a Costco membership, but I this is a strong company. It's always had good, consistently good earnings. They've had a bad quarter every now and then. It's a rarity. It happens to everybody, but for the most part, they're consistent. Man, it's a long-term investment. Yes, it's positive. Yes, for me. Short-term investment. They already reported earnings. I'm sure they had a gap up from the earnings, so I would,
No,
short-term
no,
wait.
they were down. They were down a couple
Really?
percentage points, but it wasn't enough for me to buy. It wasn't
Okay.
enough of a discount. I guess I'm gonna have to wait for either market sentiment to turn on this company for a short term, or overall market sentiment for the entire stock market to turn negative, which I believe is coming still. So
But yeah, I mean, long term investment. If you're just going to buy and hold forever, then yeah, buy it. That's a great one to own.
retail's been a real, I don't want to say weird, because we predicted this. The companies that were able to maintain good value with prices and positive net margin, and volume, those are the companies that have won out. The ones that didn't win out are the ones that went negative with their net profit margin, weren't able to maintain volume. Target, for example, I mean, we called this out 2 years ago, and it's exactly what's happening right now. What really surprised me, though, is the so-called possible return of Abercrombie and Fitch.
Really?
Yeah. I mean,
Can we get that song back too?
sales were huge. They were. I mean, they beat pretty big on earnings there. They were up, I think, somewhere around 25% on the results, and now it looks like Abercrombie and Fitch is making a comeback. Which, that is one retail sector that I never buy. I don't ever care to buy fashion, just because the trends are so fleeting, and it's never really a long term overall strategy to me.
Yep. It's too hard to guess that. I'm not a quote unquote fashionista, so I can't tell you what's going to be popular in 6 to 9 months. So
Right.
I stay out of the areas I don't fully understand like that. I just stay out of it. Why
Right.
risk?
Right. But so your value stores and your that are able to maintain those profit margins. TJ Maxx has done well. Costco now has done well. Walmart has done well. But there's been another kind of a plethora of other retail stores that have not and have been punished for it, while these other companies are outperforming.
Yep.
But let's pat ourselves on the back because we called this a long time ago.
Right. Oh
It's
yeah.
just what we said playing out, and that was an easy call. Now the hard call right now is where do we go from here? Because I've never invested in any situation like this where we're having to beat back inflation. For 10, 15 years, the problem was deflation. The problem was we couldn't get inflation to 2%. And now we're trying to, go in the other direction. This is something that really we haven't seen over the past 50 some odd years.
Right. I think Costco is set up nicely though. Long
Yeah.
lines always. So
Yep.
cool. Moving on, man. Moving on. So talking about profit margins, because I'm going to get into that. Talking about retail. A listener, if you're listening, thank you for asking a question and asking for me to cover a company. I'm going to cover Dollar Tree. This was a request. And it just so happens to report in earnings this week. So gives us a little insight pre-earnings onto Dollar Tree and kind of what's going on with it. So when I first pull up the basic, landscape here, the stock is kind of down over the last, I would say 6 months, but even over the last 5 years, it's up. It's been up a little bit, but kind of even par right now, kind of even par. When I look at PE ratio, it pulls up and it says 0. So I didn't understand where that was going from. PE ratio 0. I'm like, oh, that's a new one for me. I think it's just an error on my Fidelity site that I use. Short interest was 2.55%. Overall, they have been positive in earnings in most quarters recently. They have been producing a positive earning, which I didn't get because when I go and look at their profit margins, Brandon, this is where the red flags start for me with Dollar Tree. So
Yeah.
back in 2019, Dollar Tree went negative on profit margins, operating margins, and net margins. Gross margins stayed positive, but net margins, operating margins went negative. And they did it for 3 quarters of 2019. So 3 of the 4 quarters were negative. They went ahead and created a plan to go ahead and shutter some stores from 2019 to 2021. They did. They shuttered a few hundred stores globally in an attempt to go ahead and maybe cut some costs, trim the fat, if you will, across different areas. And it worked. They turned around and their net and operating margins went positive again. They went positive by a big amount. I mean, there's on this graph here, I'm looking at profit margins, net margins from 2010 to 2020. And you see this U right there in 2019. They have a U. And it's just crazy to see this chart because other than that part, it's pretty steady, right? So in 2023, the last quarter they reported, they were positive. Again, operating margins, net margins. And then when they reported margins again in January 31st of 2024, they went negative again, like a sharp drop negative. And
Were
so
these
that
one-time charge-offs, or what's the issue? Do we know? Do you know why they went negative?
So when I was looking into this, and it was, and so this is where we get into the margin and inflation issue. It was inflation eating into the prices, and Dollar Tree, because their total margin is not big, they had to start raising prices, and this was why one of our listeners put this towards us. One of their questions they had for me, because it was a big long paragraph that they asked. One of the questions was, why is Dollar Tree raising prices so much recently? And this is why. They have to keep up with inflation, unfortunately. And so, in order to maintain a profit margin and stay in business, they got to make a profit. That's one of the one of the reasons why they did this. When they report earnings this week, everybody's expecting better numbers because they did raise prices. They're expecting a turnaround. They're expecting it to be a 1/4 drop. However, there's a caveat to this. Because of the raising prices should be what we expect to be helping them make profitability again. During on just last month, Dollar Tree acquired 170 store leases of these 99-cent stores that went out of business. A couple months ago, Dollar Tree acquired 170 of these store leases that they deemed highly profitable areas that they wanted to go ahead and hurry up and move into. So to paint the overall big picture, 2019 was a bad year. They started cutting down stores. So they cut down their overall footprint. Well, then they started doing better for a while. Then they had a bad quarter that they reported in January, but they just raised prices in order to counteract that. So they raised their prices at Dollar Trees. So now they're making profitable. They should be reporting profitable again. So now they want to expand. So 99-cent stores go out of business. They shut them all down. Well, some of those stores are in high traffic areas that Dollar Tree wanted. So they snatched up their leases at a discount. So I don't know if Dollar Tree, when they report earnings this week, if that's going to take a huge hit on their earnings or not. They still have that small margin though, and it might eat into that margin buying up these leases.
Well, they own Family Dollar, so
Yes.
if you're shopping at Family Dollar, that's also a Dollar Tree brand. But Dollar General has always been a huge competitor to them, as has been Walmart, really. And so if you're having to raise your prices to Walmart levels, people are probably just going to go to Walmart because they have more options there. Dollar Tree does have at least, I think there's two that I just looked them up, but two private label brands, Sure Fresh and Homeline, and they are apparently some of the United States' favorite top private label brands here. But I don't see as many private label brands as you would get, for example, at Kroger and Walmart. And those are brands, by the way, that are owned by the convenience store or grocery chain that sells them. They have more of a ability to affect the profit margins on those brands than they do, say, example, Clorox or Tide, which they don't own. And one of the things that's been driving Costco and driving Walmart and Kroger to new highs have been the private label brands that they offer at steep discounts compared to name brands. I don't know that Dollar Tree has that kind of leverage, even with Homeline and Sure Fresh and their, portfolios there.
Yeah, and we're gonna see this week. So now I'm interested in watching what they report. I believe it's Wednesday. I want to see what they report, what they come out with, to see if buying up all those 99-cent stores is gonna hit that total number, or if their price increases they did was enough to turn them profitable and not be negative profit margins like they were last quarter. We'll see come Wednesday. That's when they're going to report these numbers. I'm interested to watch. We have a lot of price targets. Majority of price targets show growth, of 150 to 160, but there are a few people that say that they're going to go back down. They're currently sitting at 117, so we'll see where they end up. But a lot of people, majority of them, like I said, are showing growth at 150, 160 price target.
Okay. Is it down for this year, for year to date?
Year to date, let me pull this up. It is down. Notes. They started off the year at 133, so it is a little down year to date.
Okay.
They went all the way up to 150, and then they got more bad news, and then they started dropping, and that's when everybody's expecting to turn around due to the price increases.
That is wild volatility for an established company. That is wild. And retail's
that's
kind of been like
that's
that.
like Tesla volatility.
Yeah, I mean, retail's been crazy volatile this year, and that doesn't surprise me. But Dollar Tree, I guess, is kind of leading the charge in that volatility category.
Yes, it is. Yes, it is. Well, there you go. That's my quick synopsis on Dollar Tree. I want to move in, if we can, Brandon, to some updates on what I talked about last week. So last week, I talked about what I was seeing in the oil industry and sectors and what I thought might happen. I know in Brandon and I group chat, I made an exact call on what I thought OPEC was going to do as far as whether or not they were going to maintain cuts, add more cuts, or not do cuts. I know I was hinting that they were probably going to do cuts on the podcast. So the newswire came out. It actually came out today at 1:44 p.m. on Reuters. If you don't follow Reuters Newswire, please do it. I use Reuters all the time for everything. That OPEC Plus extends deep oil production cuts into 2025. So all the cuts that they had currently are just going to be extended. That's the ones that were agreed upon, and the voluntary cuts by 8 members. Different members had their own voluntary cuts. So all oil cuts, production cuts are going to continue. They're going to continue into September of 2025 is when they actually want to start phasing them out. Actually, that's when they want to continue them forward. That's a long time to hold these production cuts. They must be expecting the economies around the world to move into a recession of some sort and not need as much oil. That's my what I get from seeing OPEC do this. They're thinking that the economies are going to move into recession. That's why let's maintain these cuts so we can keep the price of oil higher. Currently, $80 a barrel is not enough for a majority. It's enough for some, but not all. But a majority of the OPEC plus countries need more than $80 a barrel to meet their established budgets.
Where are we right now as far as price per barrel goes? Do you know?
Around $80 a barrel.
Okay. And gas prices are still this high. That's wild. I mean,
It is, I know.
I know we're still looking at, you're talking about oil. It's also, heating houses and such. And it's much more than just the price of gas at the pump. But that's still crazy to me that gas prices are over $3 a gallon here in Ohio and probably much higher on the coastal areas of the United States. And it's only 80 a barrel. That's wild to me.
Yeah. I mean, you have that in our current administration released a million barrels over the Memorial Day weekend to assist with prices too at the pump. So that was something that we did here in the United States. Yeah, my only thought from seeing OPEC do that is they're expecting less demand for oil, and so they want to continue to keep the price high.
They've been cutting pretty consistently since COVID, though, haven't they?
Yes and no, man. I mean, they during COVID they had to cut a lot. Obviously, the price of oil went down to almost nothing.
Yeah, for years, nobody in China was driving. I mean, hardly
Yeah, I
anybody.
mean, yeah, yeah. So that was a crazy time. I know I played options on oils at that time, and I made a lot of money, a lot during that year because of when oil goes down to zero, guys, it's not staying there. And I knew that for a fact. It's not staying near zero. I'm sorry. So I played options on it and made good returns. Yeah, it's I think they're just expecting economies to stay demand to stay suppressed. To put it that way, demand is going to stay suppressed. So.
Yeah, and then also you have the electrification of the United States, which I know we have that goal for California at least for 2030 for all cars to be on the road to be electric. I don't know if we're going to meet that or not, but with the electrification of vehicles, all of the new oil that over the past 10 years has been discovered in the United States, OPEC is probably seeing that they're going to start losing their grip on the market share of oil for the entire globe over the next 5 to 10 years, and maybe they're just trying to profit from it now while they can. I don't know.
Yep. Well, talking about that, that's a perfect segue into the next article. Was this also came out this morning at 6:50 a.m. on Reuters. The headline reads: "Investors flock to Aramco share sale that could raise $13 billion." So I covered this last week. It was Saudi Aramco, the big, huge oil giant company, mainly owned by Saudi Arabia itself. They were going to go ahead and sell some of their shares off so that Saudi Arabia could take some of that money and reinvest in other non-oil investments. So in this article, it goes in to say a lot of things here, but the sale also points, this is a quote, the sale also points to efforts by the government to wean itself off of oil addiction, as Saudi de facto ruler Crown Prince Mohammed bin Salman once called it. So they even calling it an oil addiction. The sovereign wealth fund, the public investment fund, are the preferred vehicles for this tens of billions of dollars for everything the run into. The sovereign wealth fund has a lot of money in it. The public investment fund is well funded by Saudi Arabia. Saudi Aramco shares are trading currently because it is available to trade on Asian markets, and they were 2% lower today. 2% lower based off of this news in Asia, which that's because they're selling shares, right? But there's also a lot of buyers. So some of the banks that are helping to manage this, just to name a few: Citigroup, Goldman Sachs, HSBC, JP Morgan, Bank of America, Morgan Stanley, Saudi National Bank, the Al Rajid Capital, the Riyadh Capital, and Saudi Francis. So, I mean, any big name you could think of is going ahead and doing this. Buyers for this, UBS Group's Credit Suisse, BNP Paribas, Bank of China International, and China International Capital Corporation, buyers of this. A lot of this. 10% of the new offering actually is going to be set aside for retail investors, Brandon. So 10% of this is going to be available for retail investors to go ahead and purchase up and not be privately sold. That's good news there. If you're looking to buy come Monday morning and there's still some shares available.
Yeah.
There's a lot of going on here, especially with OPEC doing what they did. It's kind of you're kind of curious what's going on and why they're doing this. But I think it's just Saudi Arabia owned over 90% of Saudi Aramco, and they just want to go ahead and take some of the fat off the top there, take some profit, and reinvest it in other areas. Brandon, quick thoughts?
No.
None?
10%, actually, that's not a bad deal if retail investors want to get involved in it. It's
right.
So
that's saying that 10% of the sales. So they're expecting $13 billion total. So 10% of that $1.3 billion. That's a lot for retail investors to scoop up. I mean, that's a hefty chunk.
Yeah.
And I know the dividend pays well on this one because I read off the numbers last week of what Saudi Arabia was getting in dividends each quarter, and it was billions and billions and billions in dividends. It's definitely one to buy and own for right now. I don't, they have tons of oil to burn over there.
My thoughts kind of got focused in on you saying oil addiction, just because I think that that was a term that was invented to make people feel bad for doing things with their life.
Well, that was a quote. That was a quote from the Crown Prince Mohammed bin Salman.
When it's the only way that you have available to drive to and from work and go live a life, it's not an addiction. I got to tell you right now, like if people had the choice to not pay to have to drive, they would not pay to have to drive. If they didn't have to go to oil pumps to pump gas, they wouldn't do it. It's not an addiction. We don't like it.
You make that comment, and I'll give you an example. I have a friend of mine, trainer at a gym, and there's a free charging parking spots around town, and they will take their Tesla and park them in these free parking spots while they run errands and charge it that way rather than pay at home to charge a Tesla.
Well, that's a good idea, but I wonder what the time is on driving or on charging those cars now, because it was like 10 hours for a full charge before.
That's when it first came out. Now it's a lot faster.
Yeah, that's good. I know they had those speed chargers or whatever they were called, and they're still nowhere to be found, it seems like. I mean, I know there's one in Westchester, but I really don't know. Like, I would love to have a Tesla, but I have no idea where I would take it to charge it.
Well, you have a house. You could charge it at your house.
Yeah, but
yes, there's in your local area, Brandon. I could go offline sidebar here and give you lots of local places to charge your.
My house was built in 1958. I'm gonna have to hire Tristan or an electrician from somewhere. Tristan's a buddy. He's one of our listeners, by the way. He's an electrician. Somebody would have to come out here to rewire this entire house to be able to handle that, probably.
Right. But yeah, that's what's updates from oil from last week. So everything we reported, more reports coming out. Everything's going good for Saudi Aramco. They are finding plenty of buyers for their stocks sales. Brandon, final thoughts, man.
You know what? We don't have really any buys this week. You don't always have to have a buy. I don't see the Federal Reserve raising interest rates this year. I don't see a reason for them to.
You mean cutting or raising?
No, I mean for cutting. That's what I meant to say. I don't see them cutting interest rates at all, and I don't see a reason for them to. The economy so far, year over year, GDP's grown 2.9%. That's not terrible. It's starting. It seems maybe like it's starting to cool a little bit, according to some metrics, but still, there's definitely some time for the Federal Reserve to still beat back inflation and keep interest rates where they're at right now. And I just don't think that the market has that priced in. I just don't. I think we need a 10% correction right now to say, okay, the market's priced in the fact that there's not going to be interest rates getting cut this year. And so I'm sitting back and I'm waiting for that. There's nothing wrong with it. Have some patience. Wait for the stocks to come down into the buy zone before you buy.
Yeah, we typically see at least one correction every year, if not two corrections a year, and I think they're good. I think they're healthy for the market. It reevaluates what you want to have your money in. It's a time for people to pull out and put money in other areas.
Yeah. I mean, a lot of people were saying buy the dip on Costco, but a 1% dip, 2% dip, that's nothing. It's nothing.
Now, again, I go back to what I said before. If you're a long-term investor and you want to put some money in somewhere and let it sit, Costco's not a bad place to let it sit.
It's not, but if you want to maximize your returns over the long haul, you're going to
Berkshire
get
Hathaway.
better. You're going to get better deals. You're going to get better deals on stocks. They will come down lower at some point.
Yeah, Berkshire Hathaway is a great one if you want a good return on your money. Oh, yeah. All right, my final thoughts is I'm watching Dollar Tree this week. I don't have any calls either myself. I do know Bitcoin's been hovering right in I'm the only one who talks crypto on the show, but Bitcoin's been hovering between 65 and 68 all last week and the week before. I think at some point this year it is going to break out and go on a little bit of a run. I know it will. I'm that confident in that. So if you have some extra money to invest in some Bitcoin, some way, some shape or form, I would personally recommend it. By the end of the year, you will be positive. Yeah, but other than that, I don't have any calls this week. I'm still holding my positions. I have a position in ExxonMobil. I have a position in Apple, which if that doesn't really start moving here soon, I might just alleviate that one because it's a small position. Novo Nordisk continues to be on a rise for me. I'm still holding that, thinking that has a good opportunity to hit 150 by the end of the year, which would be a 50% return on the year for me. Not bad. But yeah, that's all I got, man. So as always, we thank you for listening, and please hit the subscribe button if you like it. We hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.